Welcome to The Explainer. I am absolutely thrilled to have you focus learners here with us today. We are going to be walking through the complete execution blueprint on exactly how to start trading in 2026. Look, whether you're a complete beginner starting from absolute zero, or maybe you're an intermediate trader who's just kind of been struggling to find that consistency, you're going to learn the exact step-by-step roadmap to profitability in the modern market. Because think about it, how many people just jump into the financial markets treating it like, I don't know, a late-night casino trip? They throw money at random ideas, hope for a massive windfall, and usually, they end up losing their hard-earned capital. We're skipping all that hype today. We are totally abandoning the gambling mindset entirely and focusing purely on a rigid professional structure.
So, here's our agenda, our roadmap from absolute zero to executing your first live trade. We've got 1. The 2026 trading landscape. 2. Choose your trading broker. 3. Automate with AI agents. 4. Build a zero-noise strategy. 5. Master risk and psychology. And finally, 6. Execute your first trade. All right, let's dive right in.
Section 1. The 2026 trading landscape.
So, why 2026? Well, 2026 actually represents literally the most significant structural reorganization of retail trading in history. Like, if you tried trading a few years ago and just got super frustrated, listen up, because the rules of the game have fundamentally changed in your favor. Those old legacy barriers, they're officially gone. For years, there was this thing called the pattern day trader, or PDT rule, which basically forced you to hold $25,000 in your account just to be able to day trade. Well, FINRA has officially removed those legacy intraday margin barriers, which is huge. It completely opens the door for smaller accounts to actively participate. Plus, we now have the newly implemented OBBBA tax policies. That's the One Big Beautiful Bill Act, which basically provides these reorganized tax brackets that actively incentivize long-term wealth accumulation for individuals. Basically, the environment has just never been more structurally sound for the everyday retail investor.
Now, check out this timeline. This illustrates the realistic 6 to 18-month journey to profitability. And what this proves is that consistency is a process, okay? It is not a get-rich-quick scheme. Month 1 is purely about your foundational education. You're just learning the syntax of the market, the terminology, and seeing how price moves. Then, month 3, that moves into simulation. You're executing purely in a risk-free environment, proving your edge without losing a single dollar. Month 6 is when you finally capitalize. This is where you introduce a really small amount of live money just to test your emotional discipline. And then month 18, that's all about optimization. By this point, you've built a solid track record, and your focus just shifts to scaling your position sizes and maximizing that edge you've established. If you commit to this exact timeline, you stop treating the market like a lottery ticket and start treating it like a real disciplined business.
Section 2. Choose your trading broker.
Now, finding the right broker is absolutely a critical step here, mainly because choosing the wrong platform can quietly eat up your hard-earned capital in hidden fees, commissions, and poor execution speeds. You need a reliable partner to access the markets, and the process is just a really simple 5 steps. First, compare brokers based on your specific trading style and goals. Second, choose your account type, like maybe an individual brokerage for active trading or an IRA for tax-advantaged holding. Third, you apply online using your U.S. Social Security number. Fourth, securely fund your account by linking your primary bank. And fifth, you start investing. Honestly, the back-end infrastructure is so modernized now that doing this is truly as easy and secure as just opening a regular checking account. To give you a really concrete US-based example here, you might look at Fidelity versus SoFi. You could choose Fidelity for their absolute $0 commission on stock and options trades, alongside their incredible research tools. And look, when you're starting with a smaller account to try and escape that paycheck-to-paycheck cycle, zero commissions are absolutely vital. Think about it. A $5 fee each way means you're literally down $10 before the stock even moves. Alternatively, you might choose SoFi if you want a 1% match on IRA transfers to sort of passively build your retirement on the side. So, your actionable tip here? Just pick the platform that aligns perfectly with your specific financial goals right now.
Section 3. Automate with AI agents.
Okay, so the biggest mistake beginners make today is looking for this single magic bot that just prints money while they sleep. Guys, that simply does not exist. Instead, successful 2026 traders are using AI platforms as specialized team members to handle the heavy analytical lifting. For example, Trade Ideas utilizes its Holly AI engine, which is perfectly calibrated for generating daily momentum trade signals and scanning thousands of tickers in mere milliseconds.
Then there's TrendSpider, which literally automates the recognition of over 220 complex chart patterns. So instead of you spending 3 hours drawing lines trying to spot a bull flag or a head and shoulders pattern, the AI maps it out for you instantly. And Kavout, that acts like a hedge fund AI advisor for really quick, data-driven market queries. So your actionable tip for this section is to delegate the tedious market scanning to these specific AI agents so you can focus your mental energy purely on actually executing your strategy.
Section 4, build a zero-noise strategy. You know, the number one reason beginners fail is because they get totally overwhelmed. We're talking blinking indicators, contradictory news cycles, endless social media hype. They end up making decisions out of pure confusion. We have to fix that with absolute clarity. So, your actionable tip is to stick to a zero-noise framework. First, focus heavily on identifying where market liquidity actually sits. Map out simple, high-timeframe support and resistance levels where buyers and sellers are obviously stepping in. Draw clear, undeniable trend lines. Plan out both a bullish and a bearish scenario before the market even opens, so you're literally never caught off guard. And most importantly, relentlessly backtest your setup. I mean it. You must do this until you hit a solid, mathematically proven win rate on historical data before you ever risk a single dime of real money. Section 5. Master Risk and Psychology. Now, I need you to pay close attention because this is arguably the single most critical part of this entire blueprint. You can have the best AI, the fastest broker, and a perfectly backtested strategy, but if you cannot control your emotions and protect your capital, the market is going to humble you very, very quickly. The crucial golden rule is 1% to 2%. You must never, ever risk more than 1% to 2% of your total account capital on a single trade, period. So if you have a $5,000 account, you are risking a maximum of $50 to $100 per trade. Listen, trading is all about probabilities, which means you will inevitably face a string of losses at some point. Keeping your risk this small is basically the mathematical guarantee that a bad week won't blow up your entire account. It's exactly how you stay in the game long enough to actually win. So, how do we systematically enforce this discipline? One word, routine. Imagine a trader without a plan. They take a sudden loss at 9:30 a.m., they get angry, they double their position size at 9:45 a.m. to try and make it back, and boom, by 10 a.m., their entire account is blown. We call that revenge trading, and honestly, it destroys way more accounts than bad strategies ever do. As an actionable tip, strictly follow a daily routine like this pre-market checklist. Complete your pre-market analysis. Define your market bias for the day. Clearly identify your key entry and exit levels. Strictly obey your execution rules, and always do a post-trade reflection to journal what you did right and what you did wrong. This systematic approach is exactly what filters out those emotional impulses and the fear of missing out. Section 6. Execute your first trade. All right, this is where the rubber meets the road. We are taking all this powerful theory, all these AI tools, these zero-noise strategies, and turning them into actual live mechanical execution. First up, download an institutional-grade platform like MetaTrader 5. Open a demo account immediately. Practice your back-tested strategy right there in that live, moving market environment using fake funds. And look, the most actionable tip I can possibly give you here is to treat that simulated money with the exact same ruthless discipline as real capital. Because if you don't respect fake money, you are definitely not going to respect real money. Do not graduate to funding a live US broker account until your demo performance is consistently green for at least 3 consecutive months. Okay, let's bring it all together and just summarize this entire explainer in 3 simple sentences. Number 1, set your foundation with the right broker and specialized AI tools to do the heavy lifting. Number 2, rely on a simple, zero-noise strategy instead of confusing indicators and hype. And number 3, remember that your most important takeaway today is that long-term consistency is entirely a byproduct of ruthless risk management. Which brings me to a very important final question for you. Will you be a statistic or a strategist? Are you going to stay in that 70% living paycheck to paycheck, or are you actually going to use this 2026 blueprint to build real systemic financial consistency? If you found this explainer valuable today, please go ahead and like, subscribe, and comment down below with which AI tool you're going to try first. And hey, make sure you hit that notification bell because our next explainer will dive deep into impartially breaking down the mechanics of the new 2026 Trump accounts and exactly how they function for long-term generational wealth building. You definitely won't want to miss it. See you next time.